Hey, good morning, everyone. Good to see a bunch of you online. Alison, Chris, James, Brendan, Aaron, Kylie, and Jeff. Morning to you guys. The early birds catch the worm. Welcome to another Wealth Coffee Chat, folks. Hey, Heath, David. Morning to you guys. Great to have you guys on this morning for a wonderful Wednesday the 13th. Hope you're all well wherever you are. Jason Witten's my name. If you didn't already know, most of you do. If you're new, give us a shout out in the chat. Say hello. Been doing these morning Wealth Coffee Chat lives for a couple of years now. Been property investing over 20 years myself, actually, and helping property investors across Australia and New Zealand, coaching property investors, matter of fact, with my team and my crew, over 7,000 property investors, to name a number. Over the last 18 years. Paid attention, learned a few things, and like to share them with you guys in the mornings. So if you're new, welcome. If you're returning, welcome back. Great to have you. And as always, let me know where you're coming from. If you are new, be great to hear from you. For this morning, I thought we'd talk about. I'd like to talk about the supply chain issues. Unless you've been living under a rock. You might know that we are in what I would call the middle of a disaster, a slow-moving train wreck when it comes to our supply chain issues here in Australia when it comes to the properties being delivered to the market. And we've got a real issue, folks, one that's going to cause some drama and some grief for a lot of people, and you want to be on the right side of this coming up. In the next few years at the very minimum, but the next decade, I think we're going to see and feel the impact of these supply issues as we go along. Some very bad decisions made by, average politicians, to be honest, for getting popular votes, have led to some real issues. But hey, Bob, good morning to you, Adrian and Andrew. Good morning. Good morning, crew. But yeah, if you've got any questions, chuck them in the chat. Always happy to answer them if I get a bit of time today, or it might inspire me to do another Wealth Coffee Chat on some of the questions you might have. But today we're going to talk about can we fix our supply chain issues, folks? Right now, we are in all sorts when it comes to what's going on. I've been talking about this one for a while. You guys have seen this. The rental crisis is just beginning. No shit, Dick Tracy. I've been saying this for over 2 years. And it's only accelerated and been exacerbated throughout COVID. Unfortunately, let's say for the Melbourneites, the longest lockdown in the world, COVID didn't do anyone any favors when it came to, that stuff. Mortgage uncertainty, rental issues, all those sorts of things, compressed the rental market for a little while. We've had, a decade of reducing interest rates, folks, anywhere from, 8-9% 10 years ago to now, or maybe last year or 2021, let's say, where the interest rate, or 2020, sorry, interest rate was at all-time lows, 2%. Some people were getting interest rates under 2% for their owner-occupier mortgages, folks. So, the interest rates going down over a decade, there wasn't any pressure on rents to go up, was there? Wages had been flat for over a decade. Boom, we come to the 2017 political grandstanding attack on property investors. The government decided they were going to get rid of foreign investors. I'll tell you why that was the stupidest thing they ever could have done a little bit later on. And then they decided to launch some bloody stupid APRA witch hunt on the finance industry, the mortgage broking industry, which should have been there to, make the banks behave themselves. And in the end, they bloody paid a small fine and moved on with their lives. Don't get me started on that one. And then we had, probably the worst finance and the worst investment onshore Australian property investors we'd seen in over a decade. The supply chain issue, folks, started in 2017. And this APRA, bad moves on the financing front from the government, getting rid of overseas investors, et cetera, et cetera, et cetera. Then along come COVID, and here's where we find ourselves. How long has that been, team? Tell me. Do the math right now. Where are we? It started in 2017. We are now at record disastrous lows in our supply chain 5 years later. So it took 5 years to get us here. What do you guys reckon? And we'll talk about this in a second. Tell me, what's your guess? What's your guess right now? How many years do you think it would take the construction industry, the property industry, to get us from where we are now, record disastrous lows, to even back to parity, even back to just normal, or catch up on the supply that we need? What do you guys reckon? Chuck that in the chat. Give me your best guess at how many years it's going to take. Yep, I reckon 10 to 15. I reckon, Brendan, if they get their finger out, they could do it in 7 to 10, 8 to 10 years. There you go. No labour resources. Exactly, folks. We don't have any bloody people in the country. We've got the Olympics. The Olympics coming up in Brisbane. That's soaking up every bloody brickie and piece of concrete and, known to Queenslanders, et cetera, et cetera, et cetera. So, folks, I'm with you. I think you're spot on. We are going to have some sort of issue or problem for the next decade. The next decade when it comes to supply. And this is the one that I'm excited about because, team, it's been fantastic to receive some capital growth. We love it. Absolutely love it. No one's going to complain about getting capital growth. But the real power in your portfolio is your cash flow. And this next decade is going to be the decade of rental cash flow booming, folks. It's coming. And I think we're going to be, pleasantly rewarded for the right type of real estate in the right spot. Listen, rubbish real estate in rubbish locations is always rubbish, doesn't it? You can put lipstick on a pig if you like, but it's just rubbish. There you go. So good questions there. 10 years. What about shared equity schemes using public land? Listen, there's plenty of things that could make it happen quicker, team, folks. The challenge is, sadly, the political backbone and fortitude in this country is lacking, no matter which way you vote, as far as I'm concerned. And they're all turkeys. They're just looking for the popularity contest, and they don't really want to fix anything. Anyway, let's not get sidetracked. But let's have a quick look at some stats. Well, I think this thing's going to be a problem, and we need to sort of understand it and potentially be on the right side of this thing, team. You don't want to be on the wrong side. Listen, the rental crisis is underway. It's already been underway for over 18 months. We've been seeing rent bumps and increases coming. You as a landlord, the heads up for certainly the next 2 to 3 years is keep an eye on your leases, keep an eye on your agents. Don't lock in too long a lease term, and get your rents up because there is some increase in interest rates coming. 1.5% to 2% is the expectation. And that means, folks, that you need to, on average, increase your rents by 25% from where they are today. Okay, so just keep that in mind to counteract that increase in your interest rate as an investor. 25% increase in your rents, okay? Or thereabouts. The other day I did a video on that, a recording on that, and we've got a calculator you guys can use to muck around with that. Now, that seems like a lot, but it's actually not. It's not. So, go and check that out. It might be 15% for some of you guys. It might be 20, 30% for some of you guys, depending on where your rents are. But let's look at this. We've got a big rental crisis underway. I've got 3 cities here on the screen, folks. Hopefully you can see them. It's a bit blurry, isn't it? I was going to say, tell me. I'm going to number these 1, 2, and 3. Okay, and number 1 city. Oh yeah, that's okay. Have a look at this city here. Tell me, as a little quiz, pop it in the chat box. Which city do you think number 1 is? The supply chain right now. Have a look at that. This is for the medium density. This is the apartment space. This is not the land space. I've got another one for land, but for the multi. Now, to supply the marketplace with enough properties, you have to be developing apartments and townhouses. Okay, that's just the way it rolls, team. Have a look at this right now. What city do you think this is? What number 1? Jeff reckons it's Sydney. Put a number next to your comment. So 1 Sydney, 1 Melbourne, 1 Brisbane, or whatever it is. So there's 3 cities. Jeff reckons Sydney. Okay, so Jeff's got on Sydney. Chris is on Brisbane. All right, well, we'll see how we go here. All right, Melbourne. There we go. Oh, we got 3. We got 3. Okay, we got this city here. Check out the supply chain of this city here, the supply machinations. Which one do you think number 2 is? Okay. Been some pretty good supply in that one, and then now, and you have a look at these things here up here, these less likely to occur. There is some projects possible. Now, the issue with possible is that, it's possible it might fail as well, okay? All right, here we go. And we've got our last but not least. Which one do you think this one is? All right, let's have a look at this, folks. Well, let's do it in reverse. Number 3. What do you guys think number 3 is? Yeah. All right, well, let's put you out of your misery. This one, folks, is Sydney. Sydney, okay? Check out that. Check out the supply. Australia's biggest city. The machine, the big kahuna, absolutely poleaxed. And the one we've got to watch right now, team, is this. Look, this is the possible one. Why is it possible? And why do I think that possible will be unlikely, less likely? Tell me what is happening right now in the world of building properties that's causing all sorts of grief everywhere and making projects untenable. Tell me what's going on right now, team, in the chat, because that one I think is going to be less possible. I think they're going to have these less likely. Like 5,700 pieces of real estate for our biggest city in Australia, our biggest, can't get builders. And even if you can get builders, Bahan, the cost of building is ludicrous. And Nikhil, absolutely. There is liquidations and challenges for builders everywhere. Team, the disaster has not even showed up yet in our statistics. Price rises in construction. Yes, boom. Right? We are still in the middle of this train wreck that is coming, which is called the supply issues of Australian residential real estate. You can't get steel. You can't get timber. Boom. These projects, this is going to go down even further. It's going to get worse, team. Okay, so that's Sydney. This is Melbs. And this is Brizzy. Okay, Briz. Let's have a quick look at Melbs. Again, have a look at the number. Have a look at the percentage of, and again, it's down a long way. Have a look at the percentage of projects that are at risk of not even going ahead. Massive amounts at risk, team. Okay, and check this one out. This one is in all sorts. Brisbane, absolutely train wreck. It's going to get worse. You check that out. 2009. Who remembers what happened in 2009 or just prior to 2009? Anyone remember what happened to give us all sorts of grief, really? And there was a shockwave for a few years after 2009. You can sort of see. Okay, let's have a look at this. Melbourne responded a bit quicker. But what happened in 2009? The GFC, folks. So have a look. 1, 2, 3, 4, 5. 5 years to respond, right? To respond. 1, 2, 3, 4, 5. Just getting its mojo back on, right? Sydney. Melbourne. 1, 2, 3 at the minimum. 4 and 5. By year 5, it was back at pace. Okay? So, team, we are at record lows, and it's all, like these question mark ones in here. Have a look at this, though. You know, if that fails, if that little bit fails right there, gee, crikey. And we know developers in Brisbane, builders in Brisbane who are saying, not a chance, this project's not getting off the ground, as we're going forward. For the smart developers, for the smart builders, the ones who've got their supply chains hooked up and sorted, they're going to crush it. The right deals coming through are going to absolutely go ballistic, right? But for the ones that didn't know what they were doing, they're in all sorts. So, team, we've got a minimum of 5 years for economic recovery. Check out this. Now, who brings new properties to market? Tell me, team. You've got two types of shopper out there. You've got an owner, occupier, or you've got an investor. By and large, who brings new properties to market, right? And let's just do this. In the world of real estate, which one of those buyers brings the exactly 85% of new properties are brought to market by investors, team. And the thing about this is that investors are a very important part of the new construction system. Now, in other countries around the world, like, there you go. The first home buyers with government grants do bring, mostly they bring houses to market, Chris, for sure. But that's like fake stimulus, right? Fake stimulus. So investors, by and large, bring the majority of the median density housing to marketplace, okay, for renting, okay? And we're talking about our rental crisis and our supply crisis, team. I think owner-occupiers are going to get into more newer and off-the-plan properties into the future because that's the only choice they're going to have. But investors bring properties to market and supply rental properties to, an ever-growing marketplace, which is pretty important. Now, the thing is, the government in its, wisdom or lack of wisdom, decided they were going to get rid of foreign investment. Now, irrelevant of how you feel about what, where, and when, to bring construction to market, folks, you need money, okay? And by and large, Australians have not got enough money to bring this supply to market. Listen to me right now. Doesn't matter how much excitement everyone has in Australia right now, we've got to fix this, all right? The Australian investor market won't be able to fix this supply issue. It won't. We need money and we need investment from other sources. And so the government, in its brain-dead wisdom, then chased away the supply of money from other places to bring our construction industry, to bring the supply to market. I just blew my mind. Now, I absolutely believe it should be managed well. That's for another discussion, another conversation, team. But we need money to build buildings and we need access to finance. So, and then what has the government done? They've chased away investment money and then they've had a witch hunt with bloody APRA and all that sort of rubbish and made money hard to get. I mean, it's bloody stupid. Anyway, I'm ranting now. So, folks, we have now had a 38% fall, even further to its lowest level in 15 years. Lowest level of foreign investment into Australian property market in 15 years. So we got we got the least money, the hardest access to real estate. We've got construction disasters everywhere. We've got, incentives for first home buyers, taking, stuff out of the market. So there's no rentals coming from that, et cetera, et cetera, et cetera. So you guys are getting the point. I'm laboring or harping on about this, but here's the nail in the coffin. Check this out, team. This is where we are. This is where we sit right now. And here's the forecast, and it's super, and I mean super aggressive from the government, all right? 180,000 in 2022-23, 200,000 in 23-24, 235,000 in 2025, and then to continue to increase. Overseas investments coming in. Or not investments, people coming in. And team, we can't even supply enough properties to the people that are here. Tell me this is going to be a disaster of epic proportions, team. Yeah. Yeah, and that's the issue, Alison. The challenge is, how do we get money into the country to construct the things we need to and not disadvantage Australian buyers, because that's the issue. I mean, that was one of the points that's brought up. The arbitrage or the valuer of another dollar, or the buying power of, let's say, 1 billion people in, let's say, India or China. And this is not, stereotyping. This was just the facts. 1 billion people there. There's more millionaires in India than there is the population of Australia. Okay, so let that land. There's more millionaires in India than there is the population of Australia. So someone, they could buy a lot of properties in Australia if that wasn't managed well. I'm a big fan of managing the end purchase thing, but what I think the government needs to unlock is the ability for investment money to be used in Australia to construct infrastructure. And one of those things of infrastructure are the supply of property, okay? It shouldn't be kept, empty and all that sort of stuff and all that sort of jazz. Yeah, exactly. And then they took away depreciation and all that sort of stuff. All of those moves by the government when it came to real estate were very short-sighted, and like at the end of the day, they have a vision to grow the country, and the backbone of people's security anywhere in the world is having a house to live in, for crying out loud. So, anyway, it's a good subject. I'm pretty pumped and fired up about this. But what's the point, team? The point is, for the next 5 years minimum, we are going to get pretty significant pressure on our rents. So don't miss out. Don't miss out, team. Don't miss out on that stuff as we move into this next bit. And I'm still very, very bullish on purchasing. Yeah, absolutely, Alison. The key to everyone understanding things is education, for sure, and certainly around money. It is very, very. It's just so frustrating that teaching people about money doesn't happen anywhere in society, right? In any of our institutions, significantly in any way, shape, or form. But yeah, I'm with you. But we have a supply issue, team. If we want to be on the right side of it, it's about the rents over the next 5 years. Make sure your properties are well maintained. If you're buying, make sure you buy properties in fantastic areas with great designs, etc. Don't miss out, because we're not going to see significant growth rates like we've seen in the last 3 years. That's just beneficial of what's happened. I think we'll see moderate rates of growth, but I think we'll see significant growth in our rents. Don't miss out on that stuff. Anyway, there you go. Bit of a ranty day, bit of a ranty morning, but at the end of the day, team, there is a opportunity for us as investors to be in position and in place for the future. And, what are we going to do about it? What are you going to do about it? Don't sit there worrying about interest rates going, oh, what happens if interest rates go up? What happens if they go down? What happens, they're going to go up. They'll go down. They'll go sideways. That is the game you're playing, team. What you should be asking is this: how can I be involved in the game, be positioned to take advantage of these things? Because that is the proper question. That's the high-level question. For you, if you want to create wealth, you want to be able to look after yourself and your family using your own economic nous, you have to play the game. You've got to be on the field, team. You can't be sitting on the sidelines. Anyway, there you go. That's it. I think I've gone over today. Time to buy. I think it's a great time to buy, Andrew. There's a couple of markets that I love for that. Come along to mentoring. We talk about them all the time. But, there you go. Well, good to hang out with you guys. Thanks for being there this morning. Hopefully that was useful. Some of these topics are always a little bit interesting to talk through. There's always pros and cons, no matter which way you slice it. But right now we've got an issue. We can't build enough properties. Fire up, Alison. Good to see, mate. Good to see. Thanks for joining us, mate. Hey, great to hang out with you guys, and have an awesome rest of your day. And then, join me tomorrow for another Wealth Coffee Chat, team, around about the same time. You guys be good. Stay well.